Good morning, everybody. Welcome back to Cilinix Crypto, and welcome to a much-needed update on Jasmy. All right, because Jasmy broke out. I last covered this, I think, on Thursday when we also broke out, but that turned into a fake out right here. As you can see, the main level, at least historically, it looks like the main level we needed to break was 2.15. You could also argue 2.2 was the main level to break, so then it was not really a fake out. But doesn't matter. We really broke out earlier today. We also gained some nice momentum. So I just wanted to give you my thoughts on what's most likely to happen next. What's happening right now in the markets, and we'll talk about that more extensively, of course, throughout the video, and what that means and the implications of that. But right now, look, it's Sunday. We're trading and we're looking at low volume market circumstances. So breakouts like these, they're real, and I think Jasmy is bullish. You can see if you look at the market structure right here, I think there was already an argument to be made that we were bullish when we broke above 1.75 cents here. But definitely with the bullish momentum we had the 15th of May, I think we turned bullish and we got into an uptrend. So I don't think that's the problem. But like I said, trading and just in general analyzing in such a low volume market situation is always risky. Like a breakout on Sunday, most fake outs happen on a Sunday. All right, and what's also true is that Jasmy, even though it's fairly uncorrelated to Bitcoin, Jasmy is still, if Bitcoin really starts moving, which it can do because the volume is so low, Jasmy will be affected by that as well. So that's why it's a bit risky right now. But what you can see is that we gained a lot of momentum. So here you can see you can see that it's with a negative CVD, which I find a little bit weird. And most of the time that we've had such a rally in the open interest, it was followed by a drop. So that's what I think is most likely to happen now as well. But I don't expect this uptrend to stop. All right. And that's essentially the most important part. Now, I should have done this before the video, but I kind of want to see if there's some sort of a divergence we can see right here. Spot buying in general has been relatively positive. You can also see that the momentum right here, so the open interest, is really going up in not the ideal way for retail, because you have these big purchases, these big buys, and then followed most of the time so far with a relatively big drop. So the two biggest drops were the 19th of May and the 23rd of May. So those are these two moves right here. I expect something similar. All right, now overall, the momentum is still going up. We're still getting a ton of spot buying, so I do think this uptrend will hold. But what I expect is something like this. Now, ideally, we hold 2.15 cents, but I'm afraid that will spike down lower towards this level right here at 2.05 and maybe even 2 cents. Now, after hitting that level, I think we'll consolidate a bit, and I do think that eventually we'll get a bullish breakout again and a continuation up to 2.4 and 2.5 cents, which is the main target. Also, if you zoom out to the daily time frame, that's the top of the range right here. So I do expect us to get there, but on the short term, unfortunately, I do think we'll have a deeper pullback right here. All right. And from this pullback, I mean, the risk is that the market turns bearish. All right. So it's a possibility. I don't expect that yet. All right. So I don't think you need to be too scared of that. But if Bitcoin really starts to get some sort of a bearish breakout here, and if it starts to drop down below 68,000, then there's a chance this uptrend will stop. For now, I don't think you need to worry about that, and I don't think that's likely. All right, but those are my thoughts. That's what I think you need to know for now. If you do have any questions, let me know down in the comments. But for now, thank you for watching. Take care and bye.